The American Central Bank just lowered our policy rate by 25 basis points. Let's talk about it. The federal funds rate is the rate at which banks lend reserves to each other overnight. So the whole point of banks lending reserves is so that they can get a return. And the Fed funds rate is also considered the risk-free rate because you are parking cash with the Federal Reserve. Like, there's no risk there. So whenever this rate drops, it's like the Fed saying, hey, go and invest in the economy, go and park your money somewhere else because you're not going to get that much of a return here. So now that you can't get this risk-free rate of return at the Fed, you have to go and an investor's always trying to get a return, right? So now you have to go and take more risk because you're trying to seek a higher return. Now all of that money that would have been just parked with the Fed and getting the risk-free rate, now that money has to go into the economy, other areas of the economy to spur growth. Now the areas this money usually lands in is like risk assets like cryptocurrency and tech stocks. So when rates go down, asset prices go up because investors are seeking a higher return. Now Trump is actually trying to get the federal funds rate to 1% or 0%, which means extremely lower rates than we are now. The lower the rates, the higher the asset prices.